going on, guys? Bexio, and today we have a brand new video on Amazon and their 20-for-1 stock split that they just announced, as well as a $10 billion buyback and how that might affect the stock, what it's already doing, and comparing it to other stocks that did split to see maybe if it's a good move for Amazon to be doing this. But before we jump into it, if you are not subscribed, make sure to smash the sub button because we're on the road to 1,000 subscribers. But let's jump right into Amazon stock split 20-for-1 and the buyback announced yesterday. The Amazon board of directors approved a 20-for-1 stock split, and it'll be the first split since 1999 and the fourth split since Amazon's IPO in 97. So kind of crazy. I never even realized Amazon did stock splits before in the past. So interesting to see that they did it in the past, but didn't keep doing it like an Apple strategy where, Apple, when the stock gets like $400 or $500, they do a stock split, bring the price down because psychologically it makes the stock look like it's cheaper and then keeps Apple at the most valuable company in the world status. So interesting to see Amazon did do stock splits, but hasn't really done it since their stock exploded. You can see from this their first stock split since the dot-com boom, and the stock jumped 6% in extended trading. So after hours, when the stock split was announced, the stock popped right up, almost went over $3,000 a share, but it's kind of trading around there right now. But stock splits, like this says, stock splits are cosmetic, do not fundamentally change anything about the company other than possibly making the shares accessible to a larger number of investors because of their cheaper price. And even this isn't really true because fractional shares exist now. You don't have to buy full shares. You haven't had to for a long time. So basically, stock splits are purely cosmetic. They're purely psychological because it makes the stock look cheaper. A lot of people don't look into market caps to see Amazon is a top 5 company in the world, or it's worth over $1 trillion, almost $1.5 trillion. So to go from what they would see right now as, say, $3,000 stock price to $6,000, it seems like a massive jump to try and double your money. But after the split, it'll be around 140. So to go from 140 to almost 300, that seems like a lot more, like it's way more doable than a $3,000 jump. Even though it's the exact same move, it would take the exact same outcome, and it would still double the market cap from $1.5 trillion to $3 trillion. So that's what the stock splits are for now. And we can see the pricing a little bit here to split happen. If the split happened right now, this was at the price of $27.85. It would go to $139. So the stock price will be around $140, maybe $150, depending on how the stock runs up before the split or does anything. But some companies that did stock splits recently are Google. There's the most recent, and then Apple and Tesla. Google did a 20-for-1 as well. It hasn't actually gone through yet, I don't think, but Apple did one and Tesla did one that are long in the past, and we can compare what their stock split did to their stock and maybe how it can affect Amazon as well. So this is Apple stock with the stock split. This right here is about the time when the stock split was announced, and you can see it just had an amazing rally. It just boomed up. But we can also say this was during the time when the market was very excited, very invest heavy, kind of hyped up. A stock split added more hype. Apple just got hyped up and the market went crazy with it. But it was a great run for Apple. Good move up. These are post-split prices, so a move from $75 to right now $157, $158 is a massive move, and that's doubling. It's a crazy move, and it's good for Apple and the psychology of the stock, for the prices to be lower, for people to think it's more affordable, and people think it's easier to go up in price, even though it's really not. And we also have Tesla that did the same thing. We see this is about the time of their stock split, and their stock did the same exact thing, running up from somewhere around 350, around that price, all the way up to 833 right now, even at the peak $1,200. So successful stock splits did what they were supposed to do, get a little psychology in there and make people think the Tesla stock just got more affordable and it's going to go even further. Tesla's an extremely hyped company, but we see Apple and Tesla, both similar stories here. Did the stock split run up? Apple, same thing. Did the stock split ran up? But for Google, it's a more recent stock split, and we can see like these two markets here, Apple and Tesla. The market was in a excited spot, a rally spot. It was going up, it was hyped up, everything was doing well during these stock split announcements. So you would think the stock splits would do pretty well, and they did. But Google just announced one, and it's around this time, and it was in February. I think it was last month, so it was very recent. And Google is actually down since they announced their stock split, and that is something we're not necessarily used to seeing because the market's in a different spot. The market is less hyped up, less in rally mode, more in fear, uncertainty, and not really taking risk and kind of watching from the sidelines. So that's the difference in the markets right here. This is a shorter time period, so we will have to let it play out a little bit longer. I'm sure it'll be fine. I mean, it's Google. Google and Amazon, they're giant companies. They make tons of money. They are great businesses, so I don't think they're just going to collapse. But for a shorter period of time after the stock split, it could be maybe a downtrend as compared to Apple and Tesla that saw uptrends from their stock splits. And then these are the stock splits that Amazon did, all of their stock splits that they did in the past. And I didn't even know they did the stock splits before. So kind of weird that they did this strategy of stock splits early and then abandoned it and let the stock just rally up when maybe they could have been worth more money. Maybe they could have been the most valuable company in the world if they stuck to an Apple-like approach to the stock price and making it seem affordable for just anybody to buy. But these are their stock splits. They've had they have had three. This will be their fourth since their IPO. The first one, it was in 99. And then obviously it was a fraction of current size. It was a 2-for-1 split on June 2nd. There was one in 98 for a 3-for-1 and one in 99 for another 2-for-1. So looking at this, that's like the Apple model, like get to $400-500 a share, split the price so it goes down to 100 and make the price more accessible, make it more psychologically appealing to people. But they kind of abandoned that, and that's why they're doing a 20-for-1. They got to do a massive 20-for-1 split because the price is almost $3,000 a share, and then they'll get it back down into the $100 range. So if they would have kept up doing these splits every time Amazon got to, $500 to $1,000, who knows what the value of Amazon would be today. But because we all know splits don't change the business, we can just take a quick look at Amazon's earnings and stuff, and it's a behemoth of a company. Obviously, earnings not a problem, skyrocketing. A little bit of turbulence here. Whatever they did in October, not sure, but then massive outbeats. $27 EPS expected, a $3.61. That is a crazy beat. The amount of money they're making is ridiculous. You can see it's just kind of a nice long-term uptrend, and they've made their revenue was $137 billion last month. That's what they reported. Crazy numbers out of Amazon. Just ridiculous stuff, and to be expected from a blue chip behemoth company. But then also, just to kind of get the stock kind of forecast here from the analyst, we can do the same thing here. You can see obviously 34 buys, no holds, no sells. Everyone's saying to buy. The average upside right now is 43.67%, so $4,000 per share. We can put that into the post split pricing. So an Amazon share right now is that just about, and then that, so it'll be 146.82 per share for the post split pricing. And then if we do the 12-month price target of 43%, 67, and then you add on 146.82, so that'll put a price of 210, almost 211 per share at the end of 12 months. That's what the analysts will be predicting. So will it happen? I mean, 43% is a crazy amount of upside for a company that's as big as Amazon, but I don't think it'd be crazy. I don't think getting over $200 within a year, depending on how the market works, depending on if, we still have so many problems, lots of uncertainty and fear. If that's still here, probably not. But if it's not, then the stock split could probably be pretty successful. Push the price back up to 210. People know Amazon's giant, and they know that it's a company that's just continuing to grow, continuing to just dominate the space, and AWS is just not even having competition. So, with all of that said, Amazon stock split. Are you buying the stock before it splits, after it splits, or just sitting on the sideline and paying attention? From what we can tell from recent companies that were giant companies that did splits, they did very well for those. Apple did very well. Tesla did very good. Google, a little too early to tell. Also a different type of market, but it's actually down. But 2 out of 3, not bad. Amazon, I think, will be strong from this split. But as always, that's going to do it for this video. So don't forget to smash the like button and subscribe on the road to 1,000 subscribers. I'll see you guys in my next